Hello traders, welcome to our new webinar. It's May 5th, the first webinar for this month. Let me know if everything is fine, please. Okay, so looks like that everything is fine. So I was away for the last few days and for one day last week because we had a holiday break in Europe, and also I took some days off visit on the seaside with my family and friends. We had some wonderful weather there, but now the rain is here and looks like it will be rainy for the whole week. So perfect time to be at the screens. Markets, as you know, are very interesting, and I think that there will be some very interesting price action in the middle of the week. As you know, we will get the announcement from the Fed, whatever they will maybe surprise and cut rates or no. For now, as you know, last week we got this advanced GDP, the first GDP for the first part of this year, and it came out below expectations. But then we got on Friday quite good jobs data. So still, in my opinion, Powell is not ready to cut rates, even if Trump is still pressuring him to cut the rates. But if he would suddenly cut the rates, what would happen? Probably there would be a lot of trust because would be lost, because traders would thought that this was politically motivated. So in my opinion, we could basically stay here on hold. By the way, markets also made a very nice strong rebound as well. We know that they are watching markets as well, and also inflation is still not at their 2% target, so maybe they are not in rush to cut the rates at this point. Now, what's interesting and what's probably the most important to track for this week, obviously, are the US yields or the US treasuries. Okay, what we have seen last week, and I've been looking and watching these levels very closely up here at the 61.8% on treasuries. We have seen a very beautiful ABC rally into that resistance, and so far we can see a very nice turn to the downside. But keep in mind that this would normally lower treasuries makes higher US yields, makes stronger US dollar. But keep in mind that this correlation has been broken in the mid of April. Okay, so we are basically still not seeing that this correlation is back, but possibly there is some positive moves since Friday when we got the non-farm payrolls report. Okay, so if the US yields will continue to for more further upside, I'm afraid that maybe dollar will still remain stuck in this range. Okay, so it would be much easier for me to look for potential shorts on the US dollar if the US yields will firstly complete this ABC rally and we see this 4.6% retested, and then market turns to the downside. Who knows, maybe we'll see a move into that area if Fed will not express some dovish views, because then obviously it means that rates will stay where they are for a little bit longer. But overall, dollar trend is very clear. Okay, I'm just looking at intermarket analysis. What maybe it would be nice to see, or easier to trade dollar on the downside, if we also would have US yields already in bearish mode. But for now, they are still consolidating. So keep in mind that maybe there is a chance that the dollar will still retest these levels from Friday. Okay, it's also Monday. Also, it was, I believe, it's holiday in the UK as well. So maybe there's still a bit of too early to say that we will or look for some real directional movements today on Monday. As you know how I feel about Mondays. Usually they can be very slow, or even if they can be very strong, prices can get reversed in the next 2 days. So we still have plenty of time for till the Fed, and easily these levels can be retested. So I'm definitely still bearish on the US dollar. I cannot say that I'm not, but I'm just saying that maybe it's not easy to say that that was the end of a wave 4. We can easily retest higher resistance levels, but keep in mind that we have 3 waves up from the lows. Okay, so sooner or later, of course, dollar will be ready to move even lower, but because of the US yields, you will have to be very careful or selective, and maybe rather look at than buying euro, maybe you look at some other, maybe some kind of a stronger commodity currencies. But overall, dollar, in my opinion, will experience more weakness, and I think that on a higher, based on the higher time frame charts, we could be looking for a drop towards 95, 96 once this correction that we are currently tracking will be finished. Now looking at a euro dollar, also we have seen some beautiful retracement here back to these 2023 highs. 2024 swing high is slightly lower here, the 38.2% far away. And if I try to look at the wave C to wave A target, you can basically see that we haven't seen a move close to 1150, which is the ideal support. So because wave C was relatively small, it's still a bit early to say and confirm that wave 4 has ended. Of course, it might have ended here, or it will be maybe a bit more complex and longer. But even if you see a drop here, I just think that you shouldn't be worried, and I just still think that this will be part of this counter trend movement. But for myself, I'm just waiting, and for clients, I'm just waiting for this pullback maybe to be a little bit more deeper. Then I would be much more confident to look for potential longs rather than chasing up here. Looking at also at dollar versus Swiss franc, this one also maybe a very important price action here as well. We got CPI data. I think it was no change for inflation, and looks like that if there will be further risk of, we know that Swiss franc will rally further versus other currencies, and maybe they will have to intervene, as they said last time, that they have one tool, that's interest rates. The other tool that they can use is the FX market. So if they will intervene, of course, we can expect that markets will be very volatile and Swiss franc could drop aggressively. And when look at this short-term price action, as I said on the euro, possibly that we are still going to see a bit lower prices. And even here, if you look at this price action, to me it doesn't look like that's all from a wave 4. I just think that this could perfectly be as a wave B, still ongoing consolidation, meaning that much more important resistance is a little bit higher. So maybe that's also another indication why maybe euro dollar could also stay in consolidation as well. But of course, it's not necessary that all of the pairs will form the same patterns. Obviously, some are lagging, some are not. Now looking at Aussie is still on the rise. We are seeing some very nice push higher for the last few days. We'll see what happens in the next 24 hours. If we fall back into this consolidation here below 64.30, then I think that that's still a chance for some kind of a flat. But even if we then retest the lower side of this recent range here at 6300, that would still be very nice and beautiful support. Maybe even some kind of a head and shoulders bottom formation here can be forming. Not maybe the perfect one, but if we fall back into the consolidation, then that's certainly possible. But on a higher time frames, as you know, direction there is pretty clear, at least for me. I think that we bottomed at the 78.6% and that we have a lot of room to rise here in the next few months on the Aussie. But if we see some pullbacks, of course, this will be just a temporary retracement, I believe, and opportunities to join this trend that could be at the beginning of the much higher degree cycles. Also, a few weeks back, we talked about those crosses, like euro crosses, especially versus commodity currencies. We even looked at some cycles, if you recall, and so far we can see some very nice reversals to the downside across these different cross pairs, and to me it looks like that commodity currencies could do really well. And of course, one important aspect why this is happening is because we have a very nice rebound on the stock market. So overall, I just think that even if stock market will consolidate and not necessarily the US stock market retest new all-time highs straight from here, I just think that these reversals that we are seeing right now on those cross pairs suggest that we will see more weakness. Okay, of course there will be some back and forth moves and some rallies in the meantime, but overall I just think that that has been a very important high here, and that we could be looking for more weakness, especially after some kind of a consolidation maybe that can still occur. That can still occur maybe in the near term. Okay, but after some pause, I think that there will be more weakness ahead. And even if you look here at pound versus kiwi, we were looking for a throw over at the start of the year or a few months back. So even back then, when we saw that that was a pretty aggressive recovery, I know how normal these pairs move and what kind of a personality of the market is, and I'm not really surprised that market reversed completely the previous rise from the start, not really from the start of the year, but from start of March, and now falling back into this wedge. So I think that there is a chance for a throw over here, and obviously I would be looking for a retest of the lower side. So watch out for more weakness. I just think that this one is also doing and looking pretty good. So what this all cross pairs says to me, that despite the very strong drop that we have seen at the start of April on those commodity currencies, these commodity currencies will make a very nice and are already making a very nice comeback, and I think that they could do much better in the next few months. Even looking at the dollar CAD, which, as you know, has trading significantly to the downside, but then all of this changed. Canadian dollar is now gaining strength, especially after a lot of tariffs, globally speaking, has been put on pause by Trump. And of course, in the course of these 90 days, markets expect that there will be trade deals. Trump already noted himself that the current situation and tariffs with China is not benefiting anyone, and obviously they are looking to find some trade deals. So overall, I just think that we will continue to see some positive news probably in the next few weeks regarding tariffs, and this could keep these commodity currencies in a strong, still in a recovery mode, especially those that should make a comeback after they lost pretty some values here in the first month or 2 months of this year. So looking at dollar CAD, I think that there will be a bit of more weakness. We are now consolidating, so maybe if we're looking for some short-term trades, I just think that whenever this triangle is finished, that there can be more weakness down towards 161.8% extension, which is basically of a wave 2. Measured, of wave 1 measured from end of a wave 2. So basically that's the ideal target, the FIB target for wave 3. But because we are now already consolidating a bit longer, I just think that maybe this could be rather the 5th wave target. But still, we are looking lower and not seeing low yet here. Also, regarding commodity currencies, as you know, when the correlations were normal, we have seen whenever the crude oil rallied, we have seen Canadian dollar making some very nice move to the upside. These correlations obviously got completely confused, mixed, broken in the last few weeks, few months. But now if you look still at the crude oil, as you know, in our analysis week back, we have said that we are seeing three wave rally from the lows with an ending diagonal in wave C, very nice, back into 64-65 resistance. And what's very important right now is that we have these 5 waves down right into this previous swing low. So keep in mind that we are at some very extreme short-term levels identified by this impulse, because always when you have some, because Elliott waves are fractal, meaning that even if you have 5 waves on a smaller time frames, this on a smaller time frame can represent some extreme levels on a lower degree, okay, scale. So let's say for the last 2 weeks, or yes, for the last 2 weeks of moves, we certainly have seen crude oil prices coming into some extremes, and these 5 waves down suggest that we could possibly stabilize in the next few days. Maybe in the course of the week we will see firstly this gap filled, maybe then retest of the lows, and again stabilization. So I just don't believe that crude oil will continue straight to the downside from here. There are already some reports that as you know, companies in the US are not profitable anymore with crude oil down here. So what really could happen, in what I think could happen with crude oil in the next few months or the course of the year, is that if we'll see crude oil moving even higher, lower, there will be companies that will obviously look to fill their reserves at a very low price. And then if suddenly in the next month, 2 months comes Fed and they cut the rates, okay, and you will have all of these trade deals on the table and tariffs will be removed, the current one between US and China, then you know that this could be very explosive for economy, and I think that crude oil could really see a very strong bounce then later this year. So when I'm looking at the crude oil, I realize that we are still in this bearish movement, bearish structure, because we are coming down into wave C, down from a triangle. But because of all of these fundamentals and macro stuff, I just would not be surprised if we'll see this trend turning around, maybe around 50 or slightly lower. That would be the ideal support, obviously, for crude oil, maybe $46-50 per barrel. So if I have to bet on timing, I just think that in the second half of this year, crude oil will do much better than the current one, than with the current prices and trend. Now looking at dollar yen is interestingly, it's coming to the downside. It's not in correlation with the US yields at the moment, but we have to focus on what we have, and so far that rally from the lows is in 3 waves. Okay, so I just think that there is a chance that dollar yen could continue even lower, especially if we can see a daily close. But because it's Monday, I would rather wait also on Tuesday to see if we can trade below this channel. Then I think that there can be more weakness and even retest of the lows, and I'm just curious to see if maybe this could be the overall driver for dollar. But of course, at the same time, we also have to respect what is happening on the stock market. Stock markets, as you know, have seen a very nice move to the upside, but that's why dollar yen also rallied a bit. But overall, the main story is that Japanese yen, because of that reason, because of risk-on environment, Japanese yen fell. But other currencies, of course, were doing much better versus Japanese yen. Like pound yen has seen a pretty nice rebound. Kiwi yen also has seen a very nice rebound. But I think that in the next few days, this week, you should be very, very careful. Even these markets that have seen a very nice rebound, I think that they may consolidate maybe in the near term before they see another push to the upside. Keep in mind that we have the S&P 500, okay? That's probably the most important. We have the S&P 500 coming back into these levels from start of April, okay? So when Trump announced these changes all to these trade wars, tariffs, whatever, well, that was the price up here, and market completely, as you know, it lost what? More than 50% here on the S&P 500. And now when we have seen this complete reversal back into this area, I just think that that's a very important area and a potential resistance, because up here a lot of transactions occurred, a lot of new orders were executed, market hedged a lot, so there were a lot of transactions going on in this region. And now when we come back into this region, there will be a lot of liquidations, and again a lot of new transactions will occur. So in my opinion, this represents very important technical resistance. I'm not saying that we will see another very strong drop, but based on what I see here and based on the substructures of this current rally, I just would not be surprised if we slow down a bit here at this 5,770, 5,800 area. The ideal scenario is that we are in the middle of some kind of a triangle, because that's really some overlapping price action here from that low. Of course, some single stocks, some other indexes will have a bit different structures. They will not all have the same subdivisions, but overall I just think that we are here in consolidation, and that sooner or later we will still see a push to new all-time highs. But maybe the perfect scenario is that we unfold this triangle till all of these potential deals are on the table, and then at the start of summer we are starting to see a new push or a very nice structure that can take us back to all-time highs. Okay, but for now, because also in Elliott wave terms, what's very important is that you have some overlapping price action here. Even if you look maybe on a 1 hour time frame, which by the way we update also daily for our members, so if you're interested in more of this analysis on a daily basis, make sure to check us at wavetraders.com. So here basically what we are looking at the intraday charts, well, we see these three waves up in the first phase, then wave X that connects the second correction that can be underway, and even some potential wedge formation. Not really sure if that's the case, but could possibly limit the upside in the near term. Okay, we'll see what happens up here. Even if I try to push the wave counts to a bit more some kind of a bullish outlook, I still would most likely see this as a very important level for this week. Okay, I just don't believe that we will simply move through it and see close somewhere around 5,950 or so. Just think that we can run through it and then see a reversal, and I will be watching this very closely what happens here, because if we fail to break higher, I just think that maybe we'll have some clues of what made this cause on the other markets. Okay, also if you look at maybe at the seasonality chart of the S&P 500, keep in mind that here in May, in the second half of May, we mostly were trading to the downside, so maybe that's perfect time when also the S&P 500 itself this year could maybe turn into some consolidation, maybe in a wave C. Now, regarding some alternate scenario, maybe someone would ask me, what if you go straight to new highs? Well, if we start moving close to 6,000 level and we see a daily close and stable price action up there, of course, then I would look for some different scenarios and potentially try to even to label and force the wave count a bit with 1-2 bullish scenario. But at least at this stage, I certainly do not want to do that, because based on personality and guidelines and rules by Elliott waves, I don't want to look for this kind of a bullish approach, because I would break some of my rules that I usually follow. Okay, I just don't want to focus on some kind of a bias here, and rather just focus on structures itself. Now let's take a look also on gold. Now metals have seen some very nice rebound, and maybe that's also another telling what maybe this could mean in the short term for stocks. Maybe we'll see some move into a resistance into the fat on Wednesday. Keep in mind that that's a free wave drop for wave 4, and if we can expect more upside here, we know what usually this meant for the other market. So for the last few weeks, whenever gold was moving to the upside, it was mainly because it was acting as a safe haven, as the best bet on that risk off environment. Okay, so if now once again I see room for more upside here into wave 5 back to all-time highs, I'm just wondering what could trigger this on the what this actually means for the other markets. It means that maybe we'll see another spin, another reversal to the downside, maybe because Powell will disappoint and markets won't get this rate cut, or maybe we'll just simply have to wait a bit longer for these rate cuts that could still be delivered this year, but maybe now it's a bit too soon. Despite this GDP print that was lower than expected, as you know, we need to have some more bad data maybe for Fed to finally act and cut. It would be maybe a completely different story if jobs data would also be very bad on Friday, but they were not. Now, if we take a look maybe on silver, this one also, in my eyes, of course, both are bullish, gold and silver, but I still think that silver has some very beautiful price action. It has 5 waves up and now contra trend movement. Maybe we already bottomed here, the 38.2%. Even if we retest here, maybe you just accumulate more. But overall, I just think that we are here setting up some very nice bullish pattern, and I think that we could see more upside. Personally, I'm waiting for another retest here around 38.2%. Then we see if we can get maybe in the second half of the week some very nice push to the upside. Overall, definitely I'm bullish here as long as we are trading above that lows from start of April. Now looking at dollar versus Mexican peso, let me close some here. No, I'll close it. Dollar Mexican peso, very nice. Or I didn't. Okay, this. Okay, now looking at also dollar Mexican peso, as you know, weeks, months back, I was looking for and was calling for this reversal because the price action was looking very similar to what we had here back in 2016, 2017, when Trump also won the US elections. So you know how hard he always goes on Mexico, and we have seen a complete reversal of that price action back then in 2017, and looks like that we are now in a very similar phase here. And if you look here on a smaller time frame, looks like that we have some very nice that's not a smaller time frame here, this you can see that we had some very nice and strong push to the downside through the whole April actually. Now we are just consolidating, and now if you look at the price action from that lows, you cannot count this as an impulse, right? It's just a pause. I mean, it's very easily to recognize what the impulse is and what the correction is. Okay, impulses are very strong, corrections are very slow, so you don't have to be some Elliott wave master or some any kind of a other degree of to have some other degree of technical skills. You just have to focus on simple facts. Okay, something that moves very sharp without any kind of a real pullback, something that is very directional, that's an impulse. But something that's not directional and you see, or you can help yourself with some kind of a boxes, well, this is then a correction. So in my opinion, this suggests that dollar Mexican peso should continue to the downside, and that we have room for 1920, maybe 1930 is the first level actually to watch for. If we suddenly see some new retest of the highs, still these are the resistance levels that we should pay attention on the next deeper rally. Now someone is asking, I can look at the Microsoft a bit later. Okay, now let's take a look also on cryptocurrencies. So cryptocurrencies are making some very nice push to the upside. We are seeing some recovery because of stocks that were doing very well. But what we said last time is that whenever the SP500 will move into that resistance 5,800, you have to be careful on Bitcoin itself as well, at least for a pullback, because also we have some different scenarios here. Okay, and the first and the primary scenario still suggests that we will see more upside, because I just think that we accomplished a higher degree consolidation here, and we could see new all-time highs. And obviously this makes sense when you also can recognize 5 waves up from the most recent swing low. But keep in mind that flat correction is also still on the table. Okay, it means that this 5 wave movement can even represent wave C of a flat. But why I'm showing you guys this is because both of the wave counts, when we start tracking these two counts weeks back, both suggested that we have some room for further upside into that resistance area around 100,000. We still didn't touch it, so I assume that maybe we can still be in a way for some consolidation here, and if the SP500 will really make that final push into that April highs, maybe this will allow cryptocurrencies also to see, or Bitcoin itself to see also another push to the upside. So for now we are still looking at this price action as a buy the dip, because I just think that we have some very beautiful price action. And if you look at the crypto total market cap, even this one could still be in a wave 4. So as long as we are here trading above 2.85 trillions, which by the way was the previous swing high here back in March of 2000 and of this year, and then we retested it as a support in April 24th, and then a few days later for once more, and now we could be still in a wave 4. So that's a very important level. As long as we are above that level and even retest maybe 2.8 trillions, there is still cryptocurrencies that can stay in uptrend. So after some consolidation phase now, I just still think that there will be more upside. If I'm wrong and we see straight push to the downside into this 2.7 trillions area, then of course I would be looking and seeing this as a higher degree consolidation, especially if the drop would be in 3 waves rather than in impulsive fashion. So as long as we are above 2.8 trillions, of course pullbacks on some coins could be seen as a correction. And I'm looking here at Ripple. I still think that Ripple could surprise. We have seen this in the past when Ripple suddenly moved on its own and firstly didn't follow the other cryptocurrencies, but maybe now when Bitcoin has seen some very nice push to the upside and could see some pullbacks, maybe there will be some new flows from Bitcoin into Ripple as well. And based on the fact that that's still a counter-trend movement from that highs, I basically would not be surprised if we see another rebound here. Maybe Ripple at some point will try to catch up of what Bitcoin did maybe last week. And here what I would be watching is a very nice support around $2. Okay, so if we see a spike into that area, maybe that could be quite attractive and interesting zone for a potential new turn to the upside. And validation level based on the short-term swings is at or below $1.6 here. Okay, also when it comes to Ripple, if you look here at liquidations heat map, notice that we have some this yellow or green, I should say. It's not really yellow, but if that would be a yellow color, it means that there will be a lot of liquidations orders in that area, but we have a lot of green color here, so it means that there are still a lot of stop losses maybe from those who are short. And what's interesting is that we have some very interesting zone as well down here. So it looks like that there can be some liquidations if we see push towards or drop towards $2, and then we finally try to catch maybe and target the upper one. Okay, so that would be the ideal scenario. And what I really like is that we don't have any massive liquidation orders here at the lows. Okay, so this makes me think that we will rather consolidate here around $2 and then rebound towards 2.5, 2.6 rather than moving straight to a new low below $1.6 here. Okay, now also maybe looking at Solana, because I have made an analysis a few weeks back on this one. I said that maybe we could be in a wave 4. You're now then in a sub wave B of this deeper wave 4, or from an alternate perspective, it's also possible that that's a flat correction. Okay, but because I see that zigzags or free wave structures are much more common, like generally speaking on the markets, I rather try to look the next leg to be a wave B rally. Also, whenever I try to analyze the markets and look at one particular direction, I try to focus on minimum expectations. So it's much easier for me to, as an analyst, to say that we have a room for $200 here to make at least 3 wave rise rather than start calling all-time highs. Okay, so let's try to focus on more realistic targets first. So that being said, I'm looking this to be a wave B rally, and what's very nice is that wave B should move, or usually will retrace for 50 or 61.8%. So 180 area is then, or up to even 200 is then very interesting level, especially if we consider that this is the first leg from the lows. Okay, but wave B is a corrective leg, should be made by and structured by 3 waves. And if you look here, then on a smaller time frame, I think I have it ready. On the 4-hour time frame, you can basically very nicely count 5 waves up, and now it looks like that we are consolidating. So there's some very nice support around 136 would be the first one. The deeper one would be around $120. So after this correction, I think that there is room for further upside while the market is trading above that level. Okay, so no matter what the big picture is, I'm trying to focus here on the short-term scale, and as long as we are holding this 95, I just think that there is room for more upside. Now, someone asked for Microsoft. Let's take a look. So Microsoft, I think that we covered this one 2 weeks back. We said that we have a counter-trend movement here from the highs. We have 5 sub-waves down in this potential wave C, and a very strong rebound that occurred after earnings. Of course, it makes me think that maybe we are completing the higher degree correction, that there can be more upside, but keep in mind that those kind of gaps are very important. So it's not recommended to chase the market here. Maybe you just wait on a pullbacks first into these gaps and then see another push to the upside. Keep in mind that that market actually moved right into this gap from earnings from January. Okay, and as I said plenty of times, gaps are firstly looking and acting like a magnet, but then could be acting as a reversal as well. So maybe buying a dip makes much more sense here, at least to me. Now looking at Tesla, as I said last time, Tesla made 5 waves down from the highs. I'm now tracking a counter-trend movement. It could be a bit higher based on this risk-on environment, but overall I just don't believe that Tesla will see straight push back to $500. I just think that after a corrective pause, some subdivisions now that could unfold in the course of the next month, 2 months, could possibly just be a wave B rally, and then I would be watching for potential channel resistance up here around 61.8%. So 340, 360, that's the area to watch for. Looking at what I have here, I think that we also covered PayPal a few times. Still bearish, not really good structure in my opinion. This one still could do very well longer term, obviously, because people are still using PayPal. So lower it goes, it still can be a very interesting opportunity on the long term, but I just would prefer maybe to wait on a retest of $50, because clearly from an Elliott wave perspective, that was an ABC rise, and this rise, it means, should be fully retraced before the correction can be finished. Looking at Visa, this one has a very nice and beautiful rebound. Also earnings were positive, it seems, so looks like that we have room for further strength from Elliott wave perspective. That looks like an ABC correction right into this gap. So you can see once again how gaps really played an important role, especially with these big volatile moves. So I think that even Visa here is looking pretty well. But that doesn't mean that in the short term we cannot see some retracement we certainly should be aware of. McDonalds also here looks like it's trapped in consolidation, so maybe after a pause I just think that there will be more upside. Watch for an ABCDE pattern that could unfold, and as I said and analyzed I think 1 week, 2 weeks back, this could be even seen as a 5-wave movement and then a counter-trend movement into the 290 area, and even this one is a bullish interpretation. So this looks like we have different interpretations, but with the same idea that McDonald's should continue to the upside after this pullback. And maybe the final stock that I want to look is a MicroStrategy. As you know, last time I was discussing about this, we had a counter-trend movement. So far, very nice, solid bounce, but we are at some resistance, and this one equals to 100,000 maybe on Bitcoin. So just watch out if suddenly we see a drop back to 320 or so, then maybe this wave 4 will be a bit more complex, but still a triangle. But the idea is that that was a counter-trend movement and that we have an uncompleted bull run. Okay, traders, thank you very much for your attention. I can see some more requests. Please, I cannot cover everything. We have, because of this, we have a chat room for our members. So if you are interested in more analysis, make sure to visit us at wavetraders.com. Please press a like as well on this webinar, and hope to see you next week. Traders, good luck. Bye.